Good morning, everybody. I'm Ed Parcaut, usually here with Mike Kelly, but he's on vacation this week, and this is Real Estate Jerky Daily. We still bring the news even if Mike's not here. All right, two economic reports that came out today. The first one is the National uh, Federation of Independent Business Small Business Optimum Index. It increased 2.2% to 93.7 in July, above expectation of 91.7, which is telling you that small businesses think that the market will eventually get better out there. Just a few of them are getting better. And one of the reasons I think that is the PPI came out today, which is the producer price index, which is it measures the wholesale inflation, that businesses pay for things. And it came out in July. The headline PPI figure increased by 0.1 below expectation of 0.2%. On a year-over-year basis, it decreased a half of 0.5%. Let's try that again. 0.5% to 2.2%, come in lower than the expectation of 2.3%. And so the markets are rallying a little bit today. The core PPI also came in, which strips out all the expensive stuff that we pay for, the food and energy prices, was flat month over month, despite expectation of a 0.2 gain. Year over year core PPI increased 0.6% to 2.4%, which was lower than the estimate 2.7%. Bottom line, just forget everything I said. It came in much better than expected. The market, the 10-year is down to 3.85, opened at 3.90. That just means we're getting closer back to where we were over a week ago. And the mortgage-backed securities are rattling a little bit. They're about 12 basis points. The market's not going crazy. It's only up a couple $100 and maybe 130 right now. Long story short, I read an article and it was saying, are buyers ready to come back into the market because rates have dropped? And everything I'm reading is they're not going to come back in until conventional is a little bit lower than 6%. Is what we're hearing. I think they've just been inundated by all the news that we've been giving them for the past year and a half, 2 years, saying, buy now, it's the best buy. I think the people who are where they're at. And I think other people, because of the inflation that they've been living through and everything we've been living through with the high costs, is tapped out the consumer. They're, the low income, middle income don't have any extra money. They're running out of money. And that is where we're at right now. That needs to change. What else is out there? There is a program for veterans now. HUD expands the supportive housing program for veterans. This is the homeless veterans, or what other people call unhoused, will allow them to not use, so they get, usually homeless veterans have a disability and they're getting some money from the VA. Well, that money was used against them in order to qualify for housing. Now they will not. They'll be pushed up to the 80% and median adjusted median income for the area to figure out to get them in versus the 50%, and that won't be used against them. So hopefully we can get some more homeless vets off the street. And that's pretty much all the news today. I even looked for, real estate news. There wasn't a lot of news today. I mean, if you really search, but tomorrow we have mortgage applications, consumer price index. Hopefully that comes in the way today's did, because it could actually come in totally different than today. That will tell us, long story short, what's going to happen in September. Right now, there's a 50-50 chance that the Fed will do a quarter and also potentially a 50 basis point move also. We won't know until September. All right, that's pretty much all I have for today. I don't want to drag on and just keep going about a bunch of stuff that doesn't really matter because Mike's not here, and that's what we do together. All right, make it a great day, and I'll talk to you tomorrow. Thank you for everything, and we appreciate you both. Both of us appreciate you. That's what